Anywho, where was I? So I'll just go over the stuff that's basically saying we're getting near a local top for if we're going to have a major retracement. If that retracement's anything similar to what we did here, we should see something similar across most of the indicators as well. So even here, when we had the highs back in mid-March that then caused a major move back down, right? We didn't break some major structure that we created to go back to the upside. So if we actually want to see something pretty cool, we had the bullish deviation here to move back up. This is, again, retail stablecoin demand. All I'm doing on here is using the on-chain metric bundle, retail stablecoin demand, and invert chart with regular divergences on. I'm using this simply as a confluence tool with the oscillator and everything else. But what are we seeing essentially? If we're looking on that, we're looking on liquidations. We're grabbing all of the major liquidations to the upside, essentially the opposite of what we did here. If we want to see breakdown, we need to actually lose levels and break back to the downside. Even in this structure here, it's incredibly similar. Absolutely incredibly similar in what we're doing. We made lows, made highs again, and then changed. But that's on the 4-hour. So let me just go up a time frame. And remember, the liquidations here is incredibly important. We're essentially breaking the band back. If I go on to bands real quick, bands on the 4-hour for liquidations, still the best time frame. We're essentially going from breaking 10x's in this whole move down to now we've broken 10x's and we're getting close to essentially 2x's. So we're getting, 5x's. So we're getting very close to an essential major change in the overall structure that could get us a drive up to do something like this, right? So very similar structure to what we're doing overall. If we do have a retracement, we should be essentially create basing structure back around 28.8 all the way down to 28.5 and not lose that if we want to continue. As soon as we start losing 28.5 and bearishly retesting, we should probably collapse. Because again, the market changes. It's not ever going to be the same across the board. But liquidations, we're just looking at the higher time frame stuff as well. Where we were essentially here as far as how low we were in the overall retail stablecoin demand. The last time we saw these levels similar to what we saw here was back down essentially at the start of the move. The start of the move that led to the higher low that moved us into the kind of like, little bit of an up run that we've had now. We've had the major kind of like droopy down nastiness. We're now essentially higher time frame, still have room to run if we want to start getting to some major resistance. So this thing could continue. Like I said, we could be like right here. If we look at the previous structure, we could be essentially like right here, in one of these parts, right around, we were at 17.5. It's very similar in the overall structure. Prices cool down quite a bit comparatively. And we still have higher time frame if you look at things like flow, which higher time frame, it has one of the best indicators as far as change in market trend and structure. We're essentially going to see, hopefully, we'll see a large caps break down at some high structure, and then we'll see essentially an alt run where alts and shitcoins actually break past it. Here we're seeing that shitcoins are doing okay. Alts are getting punished, which is pretty much on par with what we saw before. Now what I want to see in general is just a continuation of the move until we see more failure. But for me, the 4 hours king still looks clean, still looks good as far as the levels. And then, of course, on the weekly time frame, I got to switch over to the index. Weekly time frame, again, overall market saturation hasn't been hit. I think we still have plenty of room to run if we want to do stuff higher time frame, but that's way out of the wheelbox of reality right now. And even on the higher time frame for the oscillator, right? That's all we're seeing is that we've seen some break in the up move to potentially go back to the upside. Something similar to what we did back here. I think it's a bit early, but we're still at least hopefully to get a continuation run into some structure. So higher time frame, it still looks pretty decent with the up move that we've had. On the daily, we did a daily bull div back here and still made a new low, regained structure and continuation. Daily time frame, we're getting pretty low on stable. Again, harping on that kind of like local maybe retracement to maybe catch something. And then again on the 4 hour, looking between that and flow, right? We're getting extremely toppy structure there. Very, very much like even here, we're starting to see that large caps are starting to break down a little bit. So we're seeing some deviation, right? So, and if you want to see also on the flow index, and this was something, I think it was Alarin who pointed out that you can change the style on these lines. They don't have step lines. They're actually just a price line. Default, it looks very similar. All you're seeing essentially is that you're seeing a little bit of breakdown, even though we're making a high. What does it tell you? A little bit of deviation. A little bit of deviation. But again, hasn't broken anything down yet. Oscillator's about as high as it's going to go on the 4-hour. And again, same thing with retail stablecoin demand being extremely, extremely low. So last time it was up at these levels was, ridiculously way back. Essentially back in these, I think it's at the highest it's been, step off continuation. And that's the big thing, is that even if you have a breakdown, what fails the upside move? Looking at the structure here, for us to fail the upside move, we would essentially have to collapse back down to June and lose June. Once we've gained above June, we've gained above, looking at the structure-wise, the level that was holding us down in this downside move. We've now broken out and made, from a low, we've made a major high, and we still want to make a higher low off something. So it's not there yet, but it's getting pretty dang close if we're going to see some serious reversal. It's starting to a little bit on the lower time frames as well. If I go down a little bit like this, retail stablecoin demand massively high, can barely deviate for a while. But again, 4 hours still king in my mind across the board on everything. And if you want the index and the crypto flow index and turn off labels, it'll just take the labels off so you can see the lines a bit more clearly, which is pretty easy to see. So even here, yeah, you had some sideways where flow was breaking back down. We didn't lose any structure. Again, you're seeing shitcoins getting punished, alts getting punished, and the flow for high caps continuing. We're still holding level. We're gaining stuff, going to the upside. And until we start losing stuff, I'm not keen on shorting. That's my main thing to kind of point out. So yeah, overall, that's kind of my perspective. The move up has been awesome. I hope you guys got some of the longs on it from the gains of level. If you didn't, that's fine. Don't get upset about it. We're seeing at the point now where we're probably pretty close to seeing some type of reversal, at least to come back to something like 28.8. I think that's a pretty decent level if you want to see some basing, or down to 28.5, right? But again, for that to happen, I want to see some loss. I want to see a loss on May, something like that, for continuation down. Just to go into a bit more depth on it. So with that, I guess it's kind of just my thoughts. Any other questions about that, or any other things you want to look at more specifically? Nope, everyone's just super happy with everything.
Chris, I have a question. Is this price action based on BlackRock and all the other big banks opening the ETFs?
No. Most price action is always based off the same thing. It's gain or loss of level, and it's liquidity. Price will always, the fact that all that stuff is happening right now, and like there's a lot of bullish news coming into play, it's not like they didn't know about the filing of stuff, that they were going to file the stuff months ago or weeks ago. So at the end of the day, they're not stupid. They know that Bitcoin and crypto is still the wild, wild west. If you want to get some exposure to these things, what do? You FUD everything. You get your corporate shill Gensler, who is literally just there to protect the corporate interests with the SEC, to FUD everything and push price down. At the end of the day, is there some social contagion to it? Absolutely. I don't discount it. But as far as the actual upside move, my mentality is the price was trending to the downside. We grabbed a significant amount of liquidity. We made a higher low, a second higher low, essentially a V bottom, in the sense that we created the structure around, 25.8 to 26.2, broke down, higher low, created structure above it. That's, essentially textbook V bottom as far as structure goes. And all of these kind of slow grind down that that's all provided liquidity to the upside move. Because that's what the market is overall. That's literally all it is every single time. It will go towards liquidity. When you grab all the liquidity here, the majority of it, what's the next major levels to break down to? 23.1. Grabbing some of the lower time frame liquidity that we just put in, essentially at 25.8 and stuff like that. So The way I look at it is very simple. Is yes, news affects the market. It exacerbates price action. It doesn't. It's not responsible for price action, if that makes sense.
Cool, thanks.
And I know that's a weird perspective for a lot of people too. Also, by the way, there is some stuff going on today, volatility-wise. Powell's testimony today. I don't know if, and tomorrow. Yeah, I think he's testifying to both. Usually, when he has to testify, it's usually to the House and to the Senate, because there's two parts of Congress in the U.S. So, yeah, but I mean that's him in a nutshell, isn't it? But yeah, overall, that's essentially what we've seen. It's all liquidity. The liquidity movement back to the upside. Grab all the major liquidity that's left. You have to go there, and that's pretty much it. You know, about the highest you could ever go and not break structure and create new highs is 30.7. I would like this to be a step off for continuation, which means we hold essentially the high structure we created from April and Q2. So also at the end of this month, what happens in essentially a week? Q3. So this is another thing I didn't want to point out in the normie stream because they wouldn't understand it. But if you know anything about quarterly options, is that major institutions, major players use options to hedge off bets or even take large positions. Those expire essentially at the end of the month, or I think what is the last Friday of the month? It's the 30th. Yeah, so the last day of the month. Double check that. I think it's. I'm not sure if it's this Friday or if it's the 30th, because that'll change. Yeah, so max pain is they hold it here above the quarterly, since essentially for the entire quarter, once we were above it, we had price holding down, quarterly options still being entered, we're above it, and then we grind to the downside. Nobody expected this thing to do this major move up, except for people who look at liquidity, right? So the fact that we've gained above, it's going to be some wishy-washy thing, probably to do with the April Q2. So I think I need to double check and see where the majority of the liquidity is. I'm assuming that it's above the Q2. So if they want to do something really, really nasty, it would probably include doing something like, let's see. I need to double check that though. Thank you for reminding me. It would probably include something like we essentially close the monthly out either right above the April Q2, and then we do a bigger swing fail and we're done, just to wreck the options. Or conversely, we essentially, hold it here, or we hold it right underneath to come back and do some retest of structure, and then we have a continuation move. So that Q2 is going to be everything, I think, going into the end of the week, next week. Is it? When do quarterly options unlock? Are you sure it's this Friday or is it next Friday? The 30th, right? I mean, that's probably what we're looking at. I'm looking for a little bit of retracement to go back down. Why is it? Where are the dates? There we go. Yeah, options expiration calendar. There's one decent. It's the one I've used before. Yeah, so quarterly options expire on the 30th. Nice.
So they
Yeah,
do or they don't want to wreck the options?
I need to double check it, but I'm pretty sure, given that options originally started trading, stopped trading the 21st, 19th, 16th. Let me just check. '21st. So that's the first options trading stop, and that was the 19th. I think if they hold it above, that's preliminary. I need to actually look at it. I don't know where the majority of it is, but primarily, if they hold it above, what we'll end up essentially seeing is that where they hold it on the level is going to be really important, like what the actual expiry is on. If it's above it and if we have a continuation move, that's fine. We're going to have a continuation move. That's the priority in the trend and in everything. If they close it below and then do a bullish retest of level, that's a continuation like crazy, because now what you've done is you've wrecked all of the Q2 options for Q3. And they've done this a lot of times before. If you guys remember what they did last year, like why did we get short as all heck in this area, back in April? Because they did it here. They already did it. We know they did it. What happened in this zone? The yearly open was there. That was the Q1. All of a sudden they push price down, hold price below for the Q2 open, below the Q1, wreck all the Q2 options, continuation. So anyone who had options to go higher, essentially liquidity. But they did the same exact thing. They've already done it once before. We know that, right? And what happened in this zone, and this is something like to look back and to understand that exchanges do manipulate price. This is the first time we saw significant, massive increases in exchanges going short. We shorted 48 for the people who remember that. I was screaming it because it's like we're seeing the manipulation. Oh, they close it underneath. They're restricting price, and by the time we lost the Q2 on a daily time frame, it was done. It was unrecoverable. There was absolutely nothing you could do to hold it up. There was no reason to continue any type of trend to the upside. You had enough liquidity below you to go lower. And that's the thing now. It's like, where's the major liquidity if you look at a daily time frame? Right? Is there enough liquidity to go lower? That's not the right chart. There we go. Is there enough liquidity to take us much, much lower? Probably not as much. I'm guessing. I don't think there's enough liquidity. To really grab major liquidity, you have to go there, and you have to take that. And then you're probably going to at least there, and you have to go way below the yearly open to really have enough liquidity to go much, much, much lower. And that's going to be panic selling, essentially. So I'll keep an eye on that. I'll definitely double check it as soon as I do a little bit more digging on it. But I think we have some time. Yeah, there you go. It's the options order book. But then it's not just that. It's also CMT. Let's see. Let me just look at. Yeah, so Deribit, I think it's, if I remember correctly, is bigger. I'm just trying to see where the dealers. So the first time the dealers got super short, or started building shorts, if we go back in time. Yeah, so they were getting majorly short. That was their first major pop, was like at the end of May. That was the first major increase, and they increased shorts all throughout, all the way up through February, and then they closed it. They started closing major shorts, and they're still closing them now. But yeah, so let's do that whole thing though. So with the whole trend reversal, essentially, that's one of the big things that we have access to because of the tools we have, right? We can look at things like, okay, we're bullishly deviating, even on the 4-hour, using the daily. The daily is still going to be probably the most effective high time frame changes. But I'll just stick to the 4-hour because I think, to me, the 4 hours is the best time frame. You guys have heard me say that a lot of times. And that was Thursday. Bullish deviation. We saw a massive change in, very, very high retail stablecoin demand, right? We had that going on. We had liquidations, grabbing massive liquidations. We had flow, essentially. We had a breakdown where we had, we're large caps and stable were moving closer together. by the time we got into that essential structure of, essentially here, stablecoins very high, break down, and large caps increase before we even made the move. By all accounts, like, it's starting to become a little bit of a leading edge to some degree. So even here, we were doing some step ups. By the time it did that, that was a major change in flow, and then flow started essentially creating. It shows you almost the levels to hold. So bullish div, that happens in continuation, right? Bullish turnaround, continuation. Now we're just getting into the highs again. We're getting some very, very overbought conditions. But are we starting to break down a little bit on flow? Yes. Have we lost anything major? No, not really. So looking at the high time frame trends, what do we know? We know that the market goes from liquidity to liquidity. We know the market's manipulated, and we know that, you get to the point where there is no liquidity left to take. And what do you look for? You look for essentially this, and that's what we got, right? You had a regain of the level that we lost. Let me go over to the index so I can draw freely, right? We lost levels. We closed back above them. We had the most significant piece of price action on the way down, which was here. That broke down, higher low, create structure above. We've now created the perfect V-bottom structure. Okay, that's all it is every single time, right? Price is breaking down, creating structure, breaking down, higher low, very strong bullish reaction, create structure, consolidate, essentially round bottom up. Exactly what we got. So that was kind of like what I was looking at yesterday and Monday, because I know I didn't stream Monday, but it was closed. So, and in continuation is just gaining levels, right? We're continuing to gain levels even here. The only problem that we're getting into is that even on the 4-hour, this is becoming unsustainable price action, right? It can keep going. It'll keep going indefinitely until we actually break down. But we're getting to the point where, we're starting to see a little bit of large caps break down. We're starting to see a little bit of a change on a couple different metrics as well. Looking at the funding rates are coming back off. So they were holding pretty neutral even as we were pumping up. They started to pull funding rates even more, getting back into some lows. So once we start seeing some reversals on funding, which we haven't really seen overall, we see major reversals in funding. We see highs that exchanges are trying to essentially restrict. So, to put that into perspective, like, where do you see major bearish funding rates come in? Essentially where they want to incentivize people to push price down. Oh, we want to hold this. And then they start pulling it. And they hold it. And they go sideways. And they start pulling it again. Goes back down. We add some more. Goes back up. Grabs a local liquidity. It's bearish again. Oh, it's too high. Force price down. Major increase in funding rates right in this zone. We had one last liquidity grab that they increase funding rates or, incentivize bullish rates on. And not just from Bitcoin, but on ETH too. And then continuation, and then still promoting funding. So we're seeing essentially a major shift in the trend of, decreasing funding to push price down, to increasing funding to start propping price up to hold structure and move higher. So, and essentially that's also a measure of spread, right? Bing was nice enough to write a little message about that to show what was going on essentially, which was, the fact is that we're seeing, quite the disparity. We've had almost entirely negative or, bullish funding in this entire upside zone. The last time we saw it as essentially flat and neutral was when we were doing stuff back in this zone on the daily time frame. Like I said, the 4-hour is still king as far as time frames, and most of our stuff is kind of like centered on that ideology. But so even here, we're seeing some funding reversals. We're not seeing loss of level. So what I'd like to see the most of is if we come back down and create a base to go back to the upside. But with the trend reversals, at the end of the day, what I need the 4-hour or something significant or of a higher time frame to say we're changing and this is why. And my favorite things are, if I'm trading Bitcoin, it's the on-chain metric bundle. This thing is just way too powerful. Retail stablecoin demand, and then I invert the chart and put regular divergences on. That on its own on the 4-hour is one of the most clean, easy things to use as far as, are people bullish or are people allocated into crypto? So like, excuse me, are people bullish, which means here we have very, very low retail stablecoin demand, or are people bearish and they have very little allocation in the crypto? And that's retail. And what do we know about retail? The 80-20 rule. The markets work very simply, is that the majority must always be wrong. If the majority is right, the markets don't work. It's that simple. Everyone's wrong. Everyone's wrong. Price comes up. The divergences work. What happens here? Oh, we're getting bullish again. We're breaking structure and levels. We're holding stuff. Oh, poop. Nope. Nuke off a cliff. Failure. Perfect retest of swing. Fail to the downside. And that's
Chris?
all it is every time. What's up?
Is the God, I can't read that now. The retail stablecoin demand, that graph right there, isn't that the same thing as the blue line in the other indicator?
The oscillator?
No, the what's the name of it? You just had it up there. The flow index. Sorry.
Oh, no, it's not exactly the same. It's similar, but it's not exactly the same.
It's not exact.
No, it's not exactly the same because this is also like the flow score. We're actually bundling stable coins together to get like a metric of their overall output. It's very similar, but it's not exactly the same. For me, this is also just very legible and clean. But you're right. You can use it very similarly with that. The problem is you'll have some parts that are essentially disparity areas where things they're not exactly the same. They're similar, right? But not exactly the same. So here higher, they're lower. But if you have both doing the same thing, I think it's very, very powerful. And that's all we're trying to do. We're trying to see confluence of tools, indicators, things that are pointing the upside. But what's the requirement? You must gain or lose a level. If you do not gain or lose a level, this thing could say infinitely overbought or oversold. Because everyone wants to do the same thing, and it's, I get frustrated sometimes about it, but it's the truth. Everyone wants to catch the top, and everybody wants to catch the bottom. Fuck your top, fuck your bottom. The floor is 0, the top is infinite. You look for the price action change. Wait for the gain or loss of level. The continuation of the indicator saying, okay, shit's happening, we're reversing. This is why, that's why it's going up. And that's all it is, essentially. Over and over and over again of flip. And that's why I trade Bitcoin almost like that's the majority of my trades are on Bitcoin. I know how it moves. I know how it trades. I like the fact that most things are tuned to it. It's the majority of the entire market is Bitcoin. So I know that it'll command the majority of the market anyways. But that on its head, very powerful. We create a V-bottom structure. We go long on the 4 hour on the core. They're very similarly tied in that sense that they will move together. So at the end of the day, a lot of people will kind of discount the tools they have, but I've seen some things that are pretty cool, like as far as ideas. I think there was one, I tried it. Let me see if I can do it again. Move to above. So I couldn't really get it to line up correctly, but I overlaid price with the on-chain metric bundle. This is just something I was testing out because I think it's pretty damn cool to see major essential changes in the price action. And it plays out to some degree, especially if you're looking at the local price action. But if you go anything, more significant, higher time frame, it's a little bit weird. But I think it's pretty cool in that sense. It's basically showing you that we're getting into a toppy structure. We're starting to reverse. And once the reverse happens and the price breaks down back over, it's essentially going in that direction. So, I don't know, just some food for thought to try some things if you want to change things up. But ideally, you guys should have a pretty good understanding of like what's going on, what works and what doesn't work for you. And if things don't work, like hit us up, because then we'll try to find a solution strategy wise that essentially works. But also to your point, I guess with in the stream or in the chat about how do I look for like invalidation of my trade, because that's a big one. So I'll just turn this. I'll turn the tools back on. Let's see, I've got it on swing sensitivity, so I turned it up. Yeah, to plot more swings. And I'll just turn the SR on for now so we can see some coming into some more major resistance. Yeah, so we've got the next major stuff like 28.9, 29.9. We're above major quarterly structure, a very, very high time frame. What's the level we don't want to lose now? Right? What happens if we lose the level there? We're at least coming down below it to test this structure. So if we do have a breakdown for continuation, right? This is how I'd plan this, and just like, not saying it's going to happen. There's a lot of things going to happen between now and then, especially in the next couple of days. But what I'd like to see overall, if we do have a breakdown, right? I'm not looking to short the highs until we have a loss of this structure. The reason for that is that what have we done if we lose this topside structure? We've broken back down enough to where we're back within previous ranges. We're essentially back within higher ranges now. Not quite bullshit back testing a whole lot, but still back testing some stuff, still making market movements. But for us to break down and lose that, my bias in that point will flip short only until the point that we get to essentially a regain of the level. Because that's the most significant local time frame of structure. That's the current daily. It's the current April Q2. I can look to try to short May if we lose that significantly. But right now what's happening is everyone's trying to short this shit. And for us to reverse, it needs to essentially, people need to be exhausted. So it'll keep going higher as people continue to try to short it, thinking, oh, this is bullshit. We're still going to fail. And then essentially what happens is that they either get exhausted, they get put out of position, and then they start actually failing at the downside. So what I look at then is major level that major structure we want to hold. So that's a major structure we want to hold. With invalidation, it's very simple. I have to at least target, in that example, I would take it somewhere around here as a level. I'd want to make sure my risk reward ratio was somewhere around 3 or 4. I like 4 or higher. That's me. Targeting some major structure to the upside. It's a pretty decent risk reward, a pretty decent trade overall, and it gives me a little wiggle room in case we do a little bit of downside beforehand. What's the invalidation of that trade? Just curious. What are your thoughts? If I'm looking for that long from this structure, what would invalidate that, you think?
The swing to the left.
Which
Over
one?
There? Go back. Right there. There you go.
This one. What do you mean invalidate it? If it touches it, or?
Well, wicks below.
Well, that's the thing. If it wicks below or something wicks above, is that a gain or loss of level? No. Wicking above or below does not mean that level's gained or lost. Essentially, for the
level, no?
Exactly. Because everything, the assumption is, because we're trying to take it from we're looking at the TA stuff from an assumption of what can we know as a fact. Well, everything is above price. Let's say this is the top of the range. It's a deviation until it's confirmed as a breakout. It's a deviation until it's confirmed as it's a fake out until it's a breakout. That's the essential assumption that we have to do. If price goes down here, it doesn't mean, essentially, price can go there, stop you out, but that doesn't mean the trade's invalidated, because price can just go, maybe it does just straight down, stops you out, and then goes back to the upside, right? And that's really mean as shit, but it's very possible. It's not impossible at all. What invalidates the upside move is when you lose the level that you can't lose, which is essentially that, or that's a decent level as well, right? Price breaks down, bearishly retests essentially what we want to get into, and then breaks back down and makes new lows. The moment it broke down and made new lows at 28K, essentially 28.50, you've invalidated the upside moves. You've invalidated upside trades. The problem with stop losses is that we want to make sure that it's in relation to a risk reward. You can try and simplify it to make it also your invalidation, but that means your stop loss is oftentimes going to have to be too large. Versus me, I'd rather get stopped out several times if the trade is still valid and retake it, versus try and essentially argue that, oh, well, it didn't actually invalidate it and this is just a normal entry. So essentially, this is what it is, and you're absolutely right. You have to lose the level, bearish retest, continuation down. That invalidates the trade. So just touching it doesn't, because you could very easily, from just breaking down and touching the level, you could just have one of these, and we come back above, retest some structure, boom, trade still valid, and we're continuing. It's all in the manner of invalidation. If you lose the level and bearishly retest it, it's done. Over. Until you get a bullish retest of that level. And what this does is, by focusing on that specifically, you're not worrying about, taking trades that are lower probability. If you get skipped in a trade, you have to let it go. Most people get really frustrated and they get FOMO and they're like, damn it, if I only would have done this, I would have made the trade. And then the next time it happens, like, oh, damn it, I wish I would have just done this and I would have made the trade. And then what happens? People will adjust their strategy, they'll adjust their entries or their qualifications for entry, and then it goes the same way it should have gone in the first place, which is bullish retest, continuation, and now they get frustrated because, hey, I just switched. My argument is always really simple. It's stay with the highest probability trades possible. If you're staying with high probability trades and a good risk reward ratio, where you're probably going to win at least 40-50% of your trades, you're going to be profitable. And that's how we combat that. We combat the loss of trade, or the loss of our trades, because most people, until they start trading for thousands of hours, is that they'll lose more trades than they win. And that's a reality. But losing trades doesn't mean you have to lose money. You can still lose most of your trades and still make profit. How do you do that? You play only high probability setups, and every trade must equal a risk reward of 3-to-1 or 4-to-1 or higher to your first profit target. That's it. That's the easiest part about it, about TA, is that TA is probably the easiest part about trading. The rest of it's mentality, which is being able to hold stuff even though it looks really bad, but it's still within your parameters. And that's the whole thing, is if you can create the parameters of your trade that are, the most effective possible, where you're trying to take only the highest probability trades, only taking at a high risk reward ratio, making sure to set multiple take profits, moving your stop loss in a profit religiously. Doing those things systematically removes emotion. And if you're still emotional in your trades, it's probably, and you're getting sweaty and nervous, or you make a trade and you win and you like jump around and you get all happy and excited, that's just as bad. And it's probably because if you're getting nervous and upset, it's because you have too much of your assets allocated. That's most people's problem. It's essentially, until you're ready to just completely trade like a machine, like systematically, it must do this to do that. You need to essentially reduce all amount of risk and exposure to the markets that you possibly can, like low levels of stuff, to then look for continuation. Essentially, train your brain by not giving a shit about losses or stop outs or profits. And then you increase to a substantial level, 1%, 2% of your total capital at risk. Stop loss and profit, good. Let it ride. Look at the next thing and the next thing. And that's most people's problem. It's risk allocation, and it's trying to FOMO. It's emotional. It's the mentality. It's essentially the psychiatry that is used in markets against retail is absolutely the most brutal thing I've ever seen. And that's why most guys get flushed out, because you get an emotional attachment to whatever you're trading. But as far as the invalidation goes, let me see if I can give you another example. Let's go lower time frame as well. God, this thing's just freaking rocketing. This thing shouldn't stop anytime soon at all. Everything is going full Bitcoin right now. Let me just check something. And this is exactly what's happening in the market, though. This is why we have these major moves up, is that everyone's trying to do the same thing in the same place. And that's essentially short into the highs, shorting into a massive upside trend and move. I'm not going to wait for it. We go. Well, there's the flip, though. I mean, if we start essentially gaining and breaking new structure, the upside. There we go. We're grabbing all of the major liquidations we have left to the upside right now. All the major 10x's are gone, essentially. The only thing that's left is like that as far as shorts, and they're super underwater. If I were a betting man, I'd be looking for the reversal right around where we are right now. So, as an example, you don't need to take this trade or anything. I'm not going to tell you guys ever to take a trade because that's irresponsible. Right here, we're at a 4-hour major swing move, right? Getting in some high structure. Where can we expect a retest if we start breaking down back to May? So, as an example, does that hit the criteria? No, absolutely not. So, what do you have to do? To pull your stop loss up to hit that magic 3-to-1 or better. The whole idea with invalidation is that what invalidates this short? Is it closing above and bullshit backtesting the weekly SR? That's one part of it. That's one potential invalidation. That would invalidate that position until we broke back below and failed it, essentially. If that makes sense. So it's the biggest problem here when most people look at the market and the structure and they say, well, where can I want to take the most profitable trade? Well, your most profitable trades are going to be mostly the time it's when the price action lines up, but you're feeling a little janky about it.
Didn't you wait?
Yeah, you should. I mean, that's the thing. It's like at the end of the day, you could wait. You could wait. It could just collapse back down. At the end of the day, you want confirmation this is the high. So in this example, the only time I would actually look to short this IRL essentially is, we actually have a failure that goes lower and then a lower retest. And then that essentially becomes, the level I'm looking to fail to go down. But then again, I mean, depending on your risk reward, you could probably put it to there and then you get a pretty decent risk reward as far as an entry. And then if it blows you out, where's that to go? It has to probably sweep the highs. And then you're still looking for a failure. And again, that's all about risk reward. Like, so the idea is that regardless of how the market effectively works, what you're trying to do at all times is increase your chances of a position at all times to make the most amount of money. And you want to make sure it reverses at major levels. That's still, 29,820? It's still a major level. Still very important. Weekly SR above that, right? We've grabbed all of the major liquidity to the upside. What's left to take? There's some 10x stuff above it, and then some much older, higher leverage stuff that if it does that, it's invalidated either way, and it can't be re-entered either way.
If you did wait, would you wait on the 1 hour, 2 hour?
I don't use the 1 hour or the 2 hour.
Yeah.
So like I'd recommend, like, this is just from my side of things, that I don't like 2 hours. I don't like off time frame trades because all algorithms and automated trades like botting, which is the majority of the volume, uses standardized timeframes. Some will use 30 minutes. There'll be some small ones use 2 hours, but almost all of them use 1 hour, 4 hour, from my understanding. So if you're looking for something like that, as far as like an actual trade, like, I think it's pretty relevant. 1 hour, yeah, it might go faster than 1 hour. That's the big thing. If you want to have the move down, there's also a bigger, essentially a long from this zone to go back up if it holds the level, or a short if it bears to retest the level. to go lower. Like that's the whole thing, is that you have to be able to switch your bias really quickly. And even though that's why for me the best trades are waiting for the 4-hour flips to go higher. Like even from this morning, we create a base structure, blow off. We create a level that we need to flip then to go higher, back to the upside. Have we lost any momentum? Is everything still up only? Yeah. What would make it me bearish and essentially invalidate the trade overall? All right, you'd have to essentially lose the block and bearishly retest all that structure. But until we do that, the priority remains the same. That's fully parabolic on the lowest time frame. Not that it's super important. Hasn't lost anything though. It can still continue. Well, like I said, at the end of the day, it's all about like risk and understanding risk management. And if you can do that with something like this, where you can actually say, well, the short's valid until we essentially bullshit backtest these levels. If we do something like this, we bullshit backtest. If we do something like this, it's still bullshit backtesting, essentially the opposing direction of our trade. And that's very simply, it's like, oh, it's bullshit backtesting and gaining to go higher. Flip my bias. Is it good for a risk reward to potentially punt higher? Absolutely. And if you're maintaining that risk reward, then you just essentially flip your trade upside down to go essentially up to the next level, adjust your risk reward and go higher. But like I said, the trend's still continuing. It shouldn't actually fail here until it actually breaks something. Unless that is actually the entry, which is funny. But I don't think so. Yeah. Yeah.
I think it helps that the normie markets are getting crushed today.
Well, that's what happens in transition years for Bitcoin and crypto. Essentially, what you see is in bull runs, everything's up and crypto's up. In bear markets, everything's down and crypto's down. And in this transition period, you're essentially looking at what do you call it? A period where if people want exposure to the markets, and what are they going to do if they know that traditional finance, if you look at the indexes, are incredibly overbought? What's your expectation then? Like, do you want to just take profit on that? Do you want to just not make any money for the next couple of months if you potentially go through a major retracement? No, you essentially just want to continue moving back to the downside, essentially. You don't want to continue moving back to the downside. You want to actually continue making profit on the continuation of, what's the next cycle of things. Oh, well, all the spot ETFs are getting filed. Everyone's trying to make more money on that. So why? Well, yeah, I'm not taking the trade, Egil. You can't, there's no argument in here to take a short on something until you fail it. Oh yeah, even on the 3 minutes, getting parabolic. What do I want to see a failure of? Like here, I want to see a failure of that to potentially go lower. Essentially that. But until we do that, like it's continuation. But the whole thing is, and like this is like why I kind of harp on this. At the end of the day, if you want to restrict your risk reward to like 5 or 6 to 1, that's fine. You can do that. Those are significant price action moves you can do, higher time frame as well. That's not really relevant, and if you're doing 3-minute scalps, that's why we're not doing 3-minute scalps. The fact that we're holding structure like that, it just tells you it's like, okay, that's an important structure. I'd love to see us just break that high real quick.
Hey, Chris.
Yeah.
How's it going, buddy?
Well, it's good.
Can you check out why I find the 4 hour. And let me know what you think about the bearish engulfing candle to the left.
And also, don't forget, yeah, sure, one sec. Yeah, and also, guys, don't forget to use MDVD. Still really effective on like the 15-minute as well, and the 3-minute and everything, but especially on like the higher time frames. So if you want to see failure, you've got a couple blocks here that to fail at, essentially. 1820, 29,760, start failing and actually creating some broken structure to take you back down. It's actually right at the weekly SR 29.9, like to the dot. Or you get something like the majority of the bullish volume on the 1 hour being above you. It'd have to go quite a bit lower, like lose 29.5. How about the 4 hour? Yeah, it's still in. It's starting to retrace now. But yeah, like this right here is starting to look a little bit of a change in the structure, even on the lower time frames. And if you start seeing some breakdown that actually loses levels, that's a pretty significant move. But like even here, did we get the breakdown yet? No, we got bearish volume out of position still. Not that it's super important on the 3-minute, but I wouldn't trade on the 3-minute right now in this area. It's a little bit dangerous. Those are your levels, and they're pretty. I mean, reactive, I'd argue. But this thing should, like I said, should continue until it actually fails something. Which if it actually just fails that, that'll be funny. Yeah, sorry, Wi-Fi. And give me a second, guys. I gotta take some profit on one of my things. One sec. Okay. Okay, cool. What are you saying on Wi-Fi, bud?
Okay, just give him the switch for a couple minutes. I'm almost done. If you see that the 4 hour time frame, you see those two candles to the left, and the bullish, the bearish engulfing candle that took us to the low. Like this right now where we at, it's a very important structure, right? Sorry, I got the boys with me today. It's
What time frame?
4 hour.
Yeah, okay.
You see that on the 7th, that the higher low we made on the 7th, right there, and
Okay.
then bearish engulfing candle. So this, like, you would consider this to be like a very important structure, right? Because we have the swing.
I mean, yeah, but it's already done the failure. So like that was important when you're looking for that secondary short to go lower. So like price broke down, made a low, made a higher, like made a slightly upside move, and then break down to a new low. Then what do I want to see? No gains over that. So I'm looking to short the failures lower.
So okay, so those two candles got no relevance to the current price structure or price action, right?
Well, they do. Like this level is reactive to the current price action structure. Absolutely. It's not going to be the best, but it's still something. For me, it's like it's already been played out, and it's not as significant as like the high structure. Like if this is the high of the swing, like this is going to be much more reactive price structure. If I had to look at those two, right? That's going to be much more important to the local price action.
Yeah. Yeah, that's what I'm talking about exactly. Those two candles right there,
Yeah.
where you do the line.
So what I mean, like essentially what you want to see then, you want to see reaction that actually makes you lose something. Are you losing anything? No. Are you losing anything? No. Like at no point have you lost anything yet. If that makes sense.
Yep.
So I know what you want to do. You want to short this thing, right?
Yeah.
Yeah.
But
Where
not yet.
can you short it?
Wait.
Like for me, the only potential short is losing structure way below us, because everything that still makes a higher low is a continuation until we don't, till we actually break essentially this level. This is the level that makes it. Let me just look on the 4 hour and the 1 hour. Yeah, that. Losing that is essentially losing the upside momentum too. It's breaking the trend. It's breaking everything. You know, but until we do that, like, yeah, you can short higher at lower time frames, but you have to lose the levels. That's the problem. Is that, like, yeah, you can try to punt the short right here, and this might be the failure. Absolutely, but where? Like on the 1 minute? Okay, it's failing the 1 minute swing essentially. That's not usually a lot to give. Like that doesn't give me as much confidence as like, you know, breaking that structure and then coming back down and then doing something like that, and then we're losing secondary structure. You know, does that make sense?
Yeah, it does. Got it.
Yeah. So like, I mean, at the end of the day, you could be right. I mean, you could treat it as a range and just short the highs as long as you don't make, as long as you don't break out and make new structure, because you are ranging here on a very low time frame. But what's simpler to just identify essentially the low of this little range you've made, create a new low, close, come back up, look to short it until you gain and make a new high, and then it invalidates the shorts, and then you flip your bias long at the gain of the previous level. If that makes sense. And that's I mean, that's like the majority of everything essentially. Is just you want confirmation of level, you want confirmation of failure, and most people don't have the patience to wait for an actual loss of level. Like, you know, we're still step laddering, right? We're starting to see some reaction right here, but not enough to essentially lose blocks and lose levels. Like that's still holding, that's still holding. You know, everything that we've tested on this way up, even on the 3 minute, it's continuation. What's the first chance of change? Bang, close. Look for failure that goes lower. Then we go lower. But you have to have the failure.
I saw you on the 1 minute and I was like, oh my God, he's degenning.
It's the same price action everywhere. It really is. I mean, it's no different. I mean, like Will and I play those games sometimes that we look at it like we get into our own heads about the high time frames. We're like, okay, think about the 1 minute chart. Okay. Oh shit. Yeah. All it's got to do is do this, this, and this. Let this be the failure. Come on, don't pop. If you pop up, fail. Pop up and fail, and then go. But again, until it loses it, it's technically not. Ideally, we get one last blast off wick, which would be the perfect thing. You just go whoop, and then like that, and then it's done. That's always the simpler ones to trade, because then what you do is you farm out some structure, holding a really tight range, and then just go up, boop, done, and then you Bart Simpson it back to the downside. But like I said, there's no loss yet. Even here at the 3 minute, right? Like, is that the significant loss that ruins the entire upside trend? No. It ruins the 3 minute trend. Does it ruin the 1 hour trend? No. I mean, like, to ruin some of these trends, you'd have to lose $600 off the chart, and that's the problem. Is that, yeah, that's probably, you know, seeing some invalidation here, probably decent for a little punt if you want to scalp it down, but for me, like, I'd rather wait, because these low time frames, I mean, they're just sweaty. There's no real upside for trading them, you know, unless you have the balls to actually market smash in and out, because that's all you can do in those trades. Because you really, with as quickly as this thing moves, you're not, unless you have a system built up where you can, you know, press a button and it chase limits orders and does all these magical things that advanced systems can do, you know, you're probably not going to catch the high, probably not going to catch the top. It's always easier to short a failure than it is to Yeah. Anything else? I think that's everything I wanted to go through. And then the whole confluence part was essentially using the indicators and stuff to our advantage to basically say, okay, well, even here on the DGen 3 minute, failing, we're getting blue dots, yellow dots. I mean, it's going to happen on the low time frame. It's going to happen right here. To fail back down, stablecoins breaking the upside, flows breaking down. We've got that. We've got funding rates just running flat, so no help at the lower time frames. MDVD, we've got some bearish volume in position, some bullish volume out of position. So if they want to do it, they want to do it right here for a
We've
little bit
also
of
cleared the CME gap as well.
Ooh, we did. I didn't even think about that.
Yep.
Great point, sir.
I just linked the chart in the chat. So
There you go. Look at that. That's awesome. I think there's a little bit of one up here still.
yeah, there's a really small one, but I think that
I think it's almost
kind of like, yeah, it's kind of like negligible. So
yeah, I agree.
because
That's
they
cool, though.
usually close up to like 80% of the bigger gaps. So yeah, and this one's like fully closed.
I mean, what are we seeing, right? Even in this area, we don't know the data from here, but when exchanges in a downtrend are closing shorts, it's like the boys don't lose, man. The brokers and exchanges, the dealers, intermediaries, when they're closing short in a downtrend, it's like there's a lot of stuff going on. Grab the liquidity, massive, massive bearish sentiment, all the FUD in the news. It's like perfect storm for FUDness, and then we gain, we go. And this is how quickly it happened. It took us 2 months to essentially, or yeah, about 3 months almost. 2 months, April, May, no, so about 2 months to get down to this zone where people basically lost hope. And that's intro to market psychology. Oh, I know. It was just like
Yeah, that was your sign to buy.
yeah. There's a new ETF. There's also a new ETF. There's also a new everything. All the Twitter stuff coming.
Guys, I have a question. There is, I've heard some news about some exchange that backed by the SEC, that has launched today or yesterday. Is there any truth to it?
Not
It's an exchange
back.
that you can trade Bitcoin and ETH or cryptocurrency, and it's backed by the SEC itself.
So EDX is what you're talking about?
Yes, yes.
It's not backed by the SEC. It's backed by Citadel.
Citadel, Fidelity, and Schwab.
Yeah.
Okay.
So it's backed by like regulated players, basically.
Big
Is
boys.
the
Oh,
yeah.
okay. Because I saw it said regulated by the SEC, and I was like, okay, they're pushing against Bitcoin, and then now they have an exchange. But okay, that
Nah,
makes sense. Citadel,
I
Schwab.
yeah, I think that might have been like a clickbait title. So yeah.
Got it.
Yeah.
No sweat.
So it's also like the big key thing there is that it's a non-custodial exchange. So they don't hold customer funds in crypto. So they're a third-party custodian.
Got it.
It's basically a big boy DEX.
Yeah.
A big boy backed DEX.
Yeah, big boy backed DEX, and they're gonna be using Coinbase securities as the custodial platform. Or the customer's assets are going to be held on third-party banks, and they'll act as the custodian.
Okay. Makes
So
sense.
basically, it's like the exchange itself cannot turn into FTX, which is what turns people on. And now the banks get really bullish, like, ooh, we can get exposure, and we still get to keep their money because it's in our, it's in our bank. Yes.
I mean, they have to, right? Because they'll have to report their customers' trades and all that kind of stuff. That's
Yeah.
it's part and parcel of it. So yeah, it's definitely going to be one that requires KYC.
Yeah, without a doubt. Mm. Well, oh boy, it's almost 6 o'clock. Also, just a heads up, I'm not going to be around on Friday. I'm gonna see if Will can do something because I'm completely. I'm in Sweden and it's Midsummer. And if you've never heard of Midsummer, it's not like that shitty movie that some guy released a couple of years ago. It's like all of Scandinavia shuts down, and we essentially just get really drunk and dance around a maypole like old pagan holiday.
Sounds like fun.
I did? No. Oh, they don't really celebrate that in Sweden. It's like okay.
That's
Oh yeah.
Oktoberfest, no?
Yeah, no. You were talking about uh yeah, the June 6th was the yeah, national day. Yeah. So everybody got drunk for a day because it landed essentially on a Tuesday. So people took Monday and Tuesday off.
I was watching Norway last night. The weather is beautiful. I was surprised how nice it is. People in beaters and stuff.
Dude, it's like it was like 25 degrees in the sun today. Like it's or Celsius, so what is that in Fahrenheit? And retard that's
80 degrees, something like that.
it's about 75 to 80 degrees.
I don't know. I'm just estimating.
Yeah. It's funny. It's like I grew up using Celsius, but like once you start using Fahrenheit, it's so much
I,
better. Or I grew up using Fahrenheit, and when I started using Celsius, everything makes sense. Like today, it was like 77 degrees in the sun, and then tomorrow it's going to be like 84, 85 degrees in the sun, and we'll have sun all the way through August into September, and then the sun starts going down because I mean this even where I am in the south, like the sun rises at like 4 o'clock in the morning and sets at 10 o'clock at night, and it's still bright outside. Like it never goes like dark anymore. But if you go up north, like into Norway or into Sweden or Finland, you go to like Stockholm and it's bright outside. Like you can drive your car like fine because the sun's set, but the sun's so high in the sky or so it's just under the horizon. So it's still bright out. Yeah.
that's all. That's 2 hours.
Yeah, we have 6 still technically, but it doesn't ever get dark. So where he's at, like it's bright all the time.
Okay. How, how far away are you from Oslo? No, but like
Kilometers.
hours.
Yeah.
Yeah, because I was watching a couple games, and the Norway game, it's like late into the night, but it's still the sun is still out. Compared to other countries right next to it or a little bit further out, I'm seeing nighttime. I'm like, okay, trying to put this together in my head. Now it makes
Yeah.
yeah, I know that.
That's why all the
But
alcoholics die off in the wintertime because people just get
I
depressed. And go and fall asleep in the snow. Yeah. They just get depressed, get really drunk off vodka, and then fall asleep in the snow. And boom, dead.
AKA Lauren. You got some caffeine.
Chris, just scroll back on Bitcoin to June last year.
What time?
Uh, June on any time frame, even on the 4 hour or the 1 hour is fine. We're kind of like just
Oh, last year, I'm
test.
thinking 22. Yeah.
Yeah. We're kind of testing the lows of that small little swing over there before we had like the big nuke downs. So.
Yeah, I mean, it's still a significant time frame, like where we're at. At the end of the day, like what matters to me is this on a weekly time frame.
Yeah.
Like that's all that matters to me on a weekly time frame. Close above, go higher. And then this whole move that we're doing now is essentially this plus, whatever these two are. That takes us to like there, and then retrace, and then collapse, and then sideways grind down till the halvening. And
I
then
thought
one
you were
last
putting a measured move there.
measure. Oh, the measured move. Yeah, I still see that angry German person do that. He's like, yeah, but so you, if it was an expected move, is the trend lines if you do this, and the trend line is you see we are in a channel, is a channel break, and if we go to the upside and you take some measured move here, and then that you rotate it 100 degrees, and that's the expectation that we go to the upside from the channel break, and it's like,
And it's perfect.
yeah. Anyone who says the word measured move and then draws a triangle, just slap them, like metaphorically or whatever you can do, literally or metaphorically. Yeah, because they're dumb.
Guys, what exchanges are you using? Binance is still okay. I was out of trading for quite a long time now, so.
Yeah, I'm using BitGet a lot because it's still no KYC requirement.
Mm-hmm.
I got sketched out. I was with BitGet and I left half in BitGet spot and I'm using Mexi right now.
Have you tried to withdraw from XC yet?
No, I have some USDT in the spot. No, there is a clear email that shows withdrawal.
Egil, stop.
Oh, they say, oh, he's messing with me, asshole.
He's messing.
Yeah, there is. I got an email that said withdrawals and closing trades will not be affected. However, you cannot deposit nor open new trades. So I had some AI tokens back in the day from the guys when we first got into them, and a USDT, and I left it there. I moved the rest to Mexi. So far, Mexi, and to answer your questions, no, I have not tried to withdraw any money because I just trade. Maybe I'll try, see if I can get some money out.
But is anyone using Binance?
Binance is okay still.
Why did you
Okay.
ask, Chris? Have I tried to withdraw money from it?
Because they charge you for a withdrawal fee.
Oh yeah, what you said. Okay, got it.
Remember, I told you
Yeah,
that
yeah.
from the beginning. It's like
Yeah,
they
yeah.
do have lower trading fees, but they charge you
It's not
withdrawal
much.
fees.
I looked at that. It's not much. It's barely. It's like, for example, just if you want to move out $1,000, they charge you like a couple dollars extra on top of the fees they have structure. So I don't think it's that significant.
Yeah, but it's essentially how they can give lower trading fees is that they require that. And like I said, Mexi, I'm still a little bit like on it because I haven't used it enough to where I'm super comfortable with it, but it's an option at least that doesn't require KYC. No, that's not a good one though.
And I can honestly say, like from my personal experience, I love Mexi. Mexi is pretty straightforward. It's simple. They have in futures, they have them categorized each section, which is you can go to AI, memes, Arbitrum, all of that. I like it a lot. That's why I kept using it.
Yeah, I gotta go. But anyways, yeah, I guess at the end of the day, you can cut it up at least the last part, maybe Egil. It's not super important, but overall, like I said, going through the stuff we have with the liquidations, understand we are getting to a point where we are grabbing everything. Everything has been grabbed liquidity wise, the upside. If we want to start breaking out into major liquidity moves, we can. for me, this is where I'm looking for a retracement. I've taken some major profits now. Like once we were up at this level, like we literally popped at right at 30K. So either way, if we continue, we continue. Yeah, that's what I told you guys I was doing. It's like I'm taking some profits because I had to. There's okay, so, okay, yeah, I should have been more clear. I almost entirely traded Bitcoin and ETH, so yes, I was taking some profit on Bitcoin and then closing some shitcoin stuff just because. Yes, I have. I did that on the normal stream. Yeah. It's actually creating base structure to potentially continue. The only short I'd be entertaining would be April Q2 lost. Yeah. But a lot of alts will go like to extreme liquidity grabs. They have nothing left to sell to though. I mean, they grabbed everything they could. I mean, there's nothing left here at all. You know, what have they done to the upside? They've grabbed all the liquidity. So what's their best bet now? They either continue moving to the upside and get people FOMOing in so they can collapse it, or they essentially start doing the opposite of what they did here, and they just start essentially doing that, building up some levels, building up some longs, slower time frame, little lick grabs, build up enough to actually pop price down to grab more liquidity lower. I mean, that's essentially why bull markets end, you know? Bull markets end because so much liquidity exists below us that there's no incentive for market makers to continue going up with price. Because if everyone's making money going to the upside, just buying Bitcoin as an example, which everyone did in the last bull market, everybody's just buying. And there was a point where the majority, almost all of the actual positions were in profit. So like almost everyone's positions were in profit. And then like you get to a point where that's just not sustainable as far as price action. Let me turn these off. So if I turn that off and that off, and then I go here and I go change this to holders and profit percentage. You know, essentially when you have almost all holders essentially in profit, there's no incentive to go higher. You go lower, you wreck out, you wreck 50% of the market and 75% of people were still in profit. You have a blow off price action that collapses down. And now you see price was higher here than it was back in July, from January 2022 to July 21, and less people were in profit. Deviations. What do you have to do? You have to go lower. And I still think, and I mean this in all seriousness, we can absolutely go lower. Like if you look at higher time frame holders in profit from a very macro perspective, like we should be getting down to breaking down to there. We'll see what happens if we can actually get down to like the 30 threshold, something like that. We still could get down there. It doesn't mean we have to. But we barely got underneath 50% not in profit. And then we start moving back up. But anytime you start seeing way too much red or way too much green, it's essentially just DCA perspective on a higher time frame.
Hey, Sean, are you back to full trading? How's your dad, by the way?
Thanks for asking. He's much better, thank God.
Good.
Oh, that's
Are you back
great.
to
That's
trading
good
now?
to hear.
Yeah, so it was a tough couple of months for me and for him as well. So I'm in
sorry.
Cape Town now, and I'm leaving back to Europe in a couple of weeks.
Not good.
But I
That's a
missed
lot.
all the good trades on the normie market. I missed all the good trades here. So shit.
Normie markets, you might have a chance to short it if they start failing.
Yeah. I know.
Yep.
True.
Just money.
Trust me, back in the day, I was like, no, I have to open a trade. I have to open a trade now. Like, there is a bunch of times for me to open trades. Why do I need? I don't feel compelled to open trades anymore.
Good. You shouldn't. Yeah, Nasdaq is looking at a high time frame failure potentially. 4 hour could swing back up, but then you got to start breaking out the new highs. If you start running flat, it should be it. So you've made a new low on the Nasdaq. You could have the continuation now that breaks structure and comes back down. Personally, I like the reverse, like probably right around here somewhere, or maybe down at like a little bit lower. Get everyone frothy again to keep going up, and then you fail somewhere around 15. Because high time frame, this thing is freaking overbought.
Yeah.
No, they just print more money and it keeps getting overbought.
No, we just print more money. Yeah, we'll see.
But that's the thing that everyone was scaring us that the recession is coming and the world's gonna end, and then the markets make like 60-70% rally, the big tech names.
Oh, but
It's
I
weird.
mean, that's the thing. It's like, when does everything started going up? Like, the problem is that a lot of this stuff is cyclical, and at the end of the day, we start collapsing and losing price and structure. Oh, we have to generate geopolitical problems. Like war is profit. War is essentially profitable, and that's the way they look at the markets in that sense. Unfortunately,
The weird thing is that everybody thought that this year would be like negative and next year would be positive because they'll be lobbying for funds and all that kind of stuff for the elections. So
yeah. I mean,
know.
that's the thing too. It's like
Yeah.
next year is a major election in the U.S.
Yeah.
God, what a shit show that's going to be.
We were all
Telling you, man.
Oh, there's a kind of dark horse. If you guys remember John F. Kennedy, his nephew Robert F. Kennedy Jr. is running.
Yeah.
I thought it
That'd
was
be
one
cool.
DeSantis. I thought the dark horse was DeSantis. No.
No, DeSantis is just Republican nominee, I think, or not the Republican nominee, but he's a candidate.
Okay.
But it looks like they've successfully killed Trump at least.
Yeah, I think he's done. I don't think he's gonna be able to compete. But I don't know. You never know. It's the US.
Yeah.
Guys, listen. I for one voted for Biden. If I knew how the US would be right now, even though I dislike Trump very, very high, I would have probably gave my vote to Trump. It's
I
not looking
mean,
good.
that's most people, man. Like the U.S. is pretty wrecked. Like even though the markets are up, like most people, like if you look at like a middle class, and like it's basically dead. I mean, the middle class is dying. So yeah, I mean, he's also an idiot. But I mean, the problem is it's the corruption. Like that's the problem. It's the people behind him.
But it's all over the world. It's the same in Europe now.
Yeah, it's the same in Europe as it is in any developing country. It's no different. It's pay for play. It's the illusion of democracy. It's all oligarchy.
I'll put it this way. It's been around for a really long time and the system hasn't changed. It's just that now we are more aware of it because of technology. So
Yeah. But don't worry, we'll all have CBDCs, and our kids will go to school on Apple glasses and stuff like that. So, nope. Any case, I gotta bounce. You guys have a great one. Has this thing moved yet? Hold on, let me just look at Binance. BNB could absolutely go, by the way. Just heads up. Little birdie told me. Yeah, it's retracing now a little bit, but once it starts gaining something, like BNB has an ability to just pump. And the reality is the amount of money that Binance can deploy and already has deployed to prop up BNB's price is absurd. But yep, I'm gonna bounce. You guys have a good one. I guess trend changes, confluence using indicators, and kind of some trade planning or what is it? Invalidation, trade invalidation. So all we want to see here is look at that 4 hour. Are we gaining or losing?